Hey traders, welcome to Charts and Coffee. Great to see everyone. All right, so we are looking squarely at some interesting volatility for options expiration. Obviously, this kind of hot zone is one that isn't just a data release. It's not going to be a temporary explosion of volatility and volume and high impact. It's going to be something we're going to deal with all day long. Still volume, interestingly enough, is probably one of the best ways to decode sort of this, what's the idea around options expiration? Things are expiring. Wherever there's size, right? There's an old saying one of my trading mentors used to tell me, the market moves in the direction of the most stops. Now, that's not meant to be this insidious take on, oh my gosh, it's a stop running machine. They're out to get me. Hardly. I remind myself, market doesn't even know I'm there, right? It's like a surfer on the ocean. That's exactly what it's like. The ocean doesn't know the surfer's going to ride that wave. It just does what it's going to do. However, there is a lot of logic to where is the size? Because the market is an order matching or order filling machine. And if you're where the size is, well, you're where the activity is most likely to get to at some point. So look at open interest. When I can see open interest stack up on both the put and call side, and I see that high OI, there's going to be some shenanigans around that level. So that's the way I decode it. But I also choose not to actively day trade this morning. I'll look for some swing trades later on today. And if you're going to be joining me for the Ask Me Anything session we have every Friday from 2:30 to 4, we might have some setups that we're going to start to look at. All right. Okay. So as always, gang, the show is about your questions. So keep them coming. And speaking of questions, all right, I had a bunch that I got emailed to me earlier in the week. And I thought, you know what? Let me go through a couple of these because I think they're really, really good questions. And I'm just going to put them right on the screen here. And we'll jump into the current questions. And one of the questions or comments that I got is, are you bearish? And the truth of the matter is, gang, when I look at the daily time frame and even the weekly, where a lot of the sectors and individual stocks that I am still interested in are well above the 200 exponential and still in a neutral market trend, no, I'm not overly bearish. That's not to say that I won't short the market near term. Those of you that were with me yesterday morning, we shorted the S&P and NASDAQ in that 9:30 to 10:35 window. If you want to look at that, the trades that we set up, check out the free video. It's right at the Simpler Trading YouTube channel. Check out that free video from yesterday, and you'll see the walkthrough of that. So I'm not bearish, but then it flips around to, well, Raghee, if you're not bearish, clearly you must be bullish, and that's not the case either. It's okay to be neutral, gang. It's okay not to be this binary. Well, if you're bearish, you must be bullish. If you're not bearish, you must be bullish. Now, granted, I probably am a little bit more bullish than I am bearish, but I'm probably neutral bullish, and that's going to be daily time frame, weekly time frame, longer time frame, longer time horizon. Remember, there are three moves of the market, and one of them is neutral or just not really sure. It's not clearly bullish. It's not clearly bearish. So no, definitely not bearish, probably a little bit more bullish, but really right now, very much open to a lot of day trading, which brings me to the question that I get a lot of, which is, Rog, how do you avoid pattern day trading? Now, remember, if you're a day trader in the futures market, it's never been an issue, right? And still won't be. But if you're an options day trader, we have a lot of options day traders in all of our rooms, right? How do you avoid pattern day trading? The way that I've done it throughout my career is a really simple one, and it works perfectly for my style. I'm long calls, long puts, because if we're looking at a 2-minute or a 5-minute chart, I don't have a lot of time to do a lot of multi-leg, fancy footwork options trading. It's broad strokes, long calls, long puts. The market gets down to our zone. There's my trigger. There's my trade, right? So cash account, I trade out of a cash account, and I'm long calls, long puts. That's it. No issue at all with that pattern day trading rule with a cash account. Of course, futures, again, you can't trade a cash account in futures, but there's no pattern day trading rule in futures. All right, so then that brings me to what time frame do you trade off of? Gang, if I'm day trading, 5-minute time frame. If I'm quote unquote swing trading or overnight trading, it's a daily time frame. And I manage my portfolio positions, position trading, portfolio positions on a weekly. That's it. No multiple time frame analysis for this girl. So that brings me to this question here, which is, are there certain days you do not trade? Day trading wise, today's one of them. And I have found when I look back, and I was tweeting about this earlier this morning, so some of you might find that of interest or not. Here we go. So one of the things that I mentioned is, again, you have to study your own trades. And that means that whether it's an Excel spreadsheet, whether it's one of the awesome, there's no best, trade tracking software out there. It's whichever one you will use. So whichever one you use, go back and look at what symbols, what days, what times your wins and losses come from. And after, on this one's after decades, I know that options expiration, end of quarter, and non-farm payroll start getting a little bit below a win rate that I believe is acceptable. So where is this? So I choose not to trade on those. And I remind everybody, gang, don't worry about things that don't work for you. Focus on the things that do work for you. Plenty of other trading days every month. Choosing not to trade on a specific day or time does not make anyone a bad trader. Just makes you a self-aware one, right? Okay, so those are some of the questions that I've been getting, and I thought, you know what, let's tackle this on Friday's Charts and Coffee. But I know a lot of you are here, and let's get to those live questions now. Again, I'll keep an eye on the free trading room. Good morning, free trading room, folks. If you have a question, type it in. And kicking it off with Coopzilla. Good morning. I have Starbucks. Okay. I have Starbucks 92 strike puts expiring today. Thoughts on how to manage it intraday? Wow. Coopzilla, if you're going to manage it intraday, now you've got an uptrend, so I don't want to be salt in a wound, right? But this is an uptrend since, obviously you can see here around the 9th of this month. As far as puts go, obviously when you're looking at, and this, when you're looking at your bid ask and you're looking to offer out, wait for some bearish momentum. If you use my grab candles, Coop, see if you can't find a string of red grab candles. See if we can't break 91.5 on the 5-minute chart. Just see if we can't get some double red action. And once that momentum and trend starts to work in your favor, use it. Yeah, that would be my advice. All right. Christian asked, on yesterday's video on day trading, yes, you mentioned a slow stow for the first hour of trading. Do I always use a 5-minute slow stow as a primary time frame and day trade entry? The entry style that I taught in the day trading class over summer was one that embraced time and volatility. Now, we've taught day trading classes with trends. We've taught, that was my first day trading class 3 years ago. The second one, and every one feeds on, they're really 3 volumes, if you will. First one was price and trends. The second one was volume and volume levels. And this third one was volatility and time, which cover the 4 factors of trading: price, volume, volatility, time, right? If I'm working a neutral market with volatility and time, a slow stochastic, a 21K 3D, you can set this up on any platform. 80 overbought, 20 oversold, 21K 3D on a 5-minute chart. Gosh, it works on any time frame. You really, anytime we have a setting and indicator that we use, and this is systems designing speak, but I think it applies to us discretionary traders, it should be both universal and robust. And all that means is it should work on everything and it should work well. So there's no such thing for me as a stochastic setting on a weekly chart that I wouldn't apply to a 5-minute chart, or a setting that's different on the S&P versus, say, US dollar, universal and robust. And yes, I do. And not just for the first hour, that's for all day, Christian. But one of the things that I was really trying to get across is the summer habit that we had. And our summer day trading was exceptional. We weren't worried about what happens tomorrow. We weren't worried about what happens next week. 9:30 to 10:35, and that was our soft cutoff. And I'm realizing now when I break down my trades and I look at to 1035 and post 1035, my win rate, and I think a lot of you who day trade with me in the Sector Secrets room, and by the way, every morning we get together and day trade in that Sector Secrets room, that hour is probably my favorite. Not probably, it is. And not only is it my favorite, it's frankly my most productive. That's where when I see the lion's share of my productive, profitable trading, it's happening there. The clearest setups happening there. And with the HPMR, which, by the way, for those of you that aren't familiar with the HPMR, that's the time and volatility tool that I created a long time ago. The green and red zones, which I think was one of the questions that I got. That's the slow stow. And that is a fantastic way to fade. I love this image. Darth Vader, that's me. When you have a neutral market and the market rallies up to resistance or sells off to support in an overall neutral trend, that is a very powerful way to take advantage of exhaustion at one of those zones. So yeah, that's my Darth Vader approach. All right. META short, it broke support. Let's take a look. And again, gang, unless you have a time frame other than the daily or the 5 that you're looking at, let me know, because I'll end up migrating to one or the other of those. So take a look at META. Ray, this thing has been just under the 200. It's been mostly in a double red downtrend for the year. So I'm going to show you the year here. There we go. Double red downtrend, mostly heading lower, just mostly red grab candles. So the path of least resistance in a downtrend is breaking support. And once again, not only have we broken the point of control around 165 in Meta, let's face it, this is Facebook. Not only have we broke 165 in Facebook, Ray, you're absolutely right. We've broken Darvis support. Here's your automatically drawn support and resistance level right in there. Now, if you do not have Darvis 2.0 and you want to be able to have this awesome automatic support and resistance drawn on your chart, gang, we've made this thing available for free here from Simpler since 2016. It's been a lot of years. It's a powerful tool. I think it's the best way, thank you, Nicholas Darvis, to identify support and resistance in a unique way. Pattern-based, previous action-based, as opposed to projecting. And you can grab that. It's built in TradingView. If you search Simpler within the indicators, you'll find the Darvis 2.0. And absolutely right, broke support, path of least resistance is down. I'm with you there. All right, next up, editor asks, with my past experience, have I seen this type of intraday volatility before? Oh gosh, and worse. Editor, yes. Back in 2018, was it? John and I did an impromptu day trading class. I think it was 2018. We had a dramatic amount of volatility in the month of March or April. And a lot of folks were saying, oh my gosh, we're so scared. And I don't remember. It's been a few years, but somewhere the conversation is, look, what do we want to be able to do for you here at Simpler? I put this on my Twitter feed. I love this. And I'm a huge, I don't know how many of you have read Never Split the Difference from Chris Voss or watched his TED Talk or any of his videos. One of the things that he talks a lot about is you are 31% smarter in a positive frame of mind. So being a pessimist and being someone who's just waiting for the other shoe to drop just makes me dumber. So I try to focus on where's the opportunity. And that's what happened in 2018. Ton of volatility. We could tell that the Simpler community was thinking, oh my gosh, how are we going to trade through this? And I don't remember, but John and I might have compared notes and said, gosh, this has been a great environment. We need to talk about this. We need to show them there's no need to be scared. that there's opportunity. And that's what I love about sitting down and talking to John about the markets, because there's always something that can be done with the current environment. It may not be on a short term, it may not be in a very long term, but if we look, there is an opportunity somewhere. So I love working with positive people like that, right? And then that's really it. Have we seen this before? Worse. But is it tradable? Absolutely. Editor, straight up. My daily time frame trading, my swing trades, we don't have hardly any trends on the daily time frame. And it's been tricky. The one trend that we got towards the end of August got Donkey Konged by Jerome Powell in Jackson Hole. That morning, Jerome woke up, drank his first cup of coffee, and he chose violence. That killed our trends. That just absolutely destroyed our trends. And really since then, and before then, I was focusing on mostly day trading. And I, frankly, straight up, never should have stopped until we have a clear picture on what the target rate probabilities are going to be, and therefore what the tone of the FOMC is going to be. Sticking with the short term continues to make the most sense. So yes, far worse than this, frankly, but definitely tradable, definitely tradable. I don't ever want to sit here and be a pessimist and be a fearmonger, because it just makes us dumber, right? If nothing else, it's simply not practical, right? It's just not practical. All right, next up. Hey there, Araz. Yesterday I mentioned, oh yes, you know what? Araz, I realized that I was thinking of you this morning, but I will tell you, I'm going to totally blame my sister for this. She's in town right now, and I was trying to find that link and got totally distracted. You know what? Give me one moment. Give me one moment, because I think I might actually have it. But I'll answer some questions in the meanwhile. And thank you for the nudge, Araz. Great memory. I do appreciate that. It's on my YouTube channel, and it's unlisted because I didn't want to just put it out there. But it is on my YouTube channel, which I may not be logged into right now. So I got to go grab that link. I'll see if I can't do that. Thank you. And by the way, free trading room and members within the Simpler community, I do have that video. It should be in the archives. If you're a member of any of the services, you should be able to go back and check out that 5 steps to risk management conversation. And there it is. All right. Thank you, Roz. Here it is. Here's the link. And I'm going to, hey, bot. Actually, I think I can send it. Here it is. I just sent it through the YouTube channel, and there, free trading room. That is the link. That is the link. Okay. All right. I was just going to send it to the bot. I'm thinking I could do that. Hey there, Jeff. Jeff mentions first day with Simpler Trading. Jeff, I'll tell you what. Glad to have you. I don't know which room you're in, but we are here to lock arms with you, and fantastic having you on board. All right. Zane, good morning. Love the show. I love doing it, Zane. I love doing it. Can I talk VSA analysis? Zane, I really can't. I can't say that that's something that I use. I'm only vaguely familiar with it. I'm trying to see if I have anything in my notes. The closest thing I've probably ever done with this, and I'm looking at my notes here, is looking at, well, of course, number one, I love that you're looking at volume within a candle. So you're looking at price-based volume as opposed to time-based volume. Probably the closest thing I've ever done to this, I don't do it a lot, is market profile. Market profile. Or for those of you that are on the, trend spider charts, which I've used, they have something called a raindrop candle, I think. Those are kind of cool and do something similar, but I don't necessarily I look at the volume per candle. I look at the volume per price. I've done market profile through amazing software like the Blue Window software, but I don't look at that range spread. Not that there's anything wrong with it, Zane. I love that you're looking at volume. So I don't have a lot of personal experience with it. So I think it's important for me to acknowledge I don't have a lot of experience with it, so I probably shouldn't say a lot about it, other than I will say this, and I'm confident in saying this. If you are using volume in any capacity in your trading, price-based volume, you are on a great path. Absolutely. All right, free trading room, folks. I do believe I need to let you all go. YouTube folks, hang on for a bit. I'll answer a few more questions, and I will see you all on free trading room, folks. I'll see you all on Tuesday. Okay. Thanks as always for your questions. All right. My YouTubers. All right. We'll hang out for a little bit longer. Don't want to run over somebody else's time. Does options expiration affect futures? Yes, of course, because IB there it's all the options are expiring. We're getting the contract expirations. So the reason it's triple witching, quad witching really doesn't count, because quad witching includes this thing that nobody trades, which is the oh God, what was it? Stock something or other. Stock futures. I don't even remember what it was. So it's not really quad witching. It's really triple witching, but it's all the witchings. Yes, because we've got contract rollovers in futures, we've got options expiration on the futures, and then the individual stocks that are heavily weighted within the indices, right? The heavily weighted stocks weighted within the indices are also going to affect. So your Apple is absolutely going to affect NASDAQ and S&P. When you think about a high concentration weighted stock within the indices. So that's why and how. Yeah. All right. FXE looks good to the downside. Look, I think that overall, I'm with you. It's been a downtrend. It is quite bearish, but I'll just say the same thing that I've been saying probably since July, which is the best days for euro downside and frankly US dollar upside are behind it. Doesn't mean that it's time to short. Remember, please don't think everyone here, gang, if I say I don't want to be aggressively shorting, it doesn't mean that I want to be buying. But I agree, Nikolai, as long as I don't have expectations that were calibrated to the kind of action that we saw earlier in the year, I think we're fine. I think we're absolutely fine in that regard. Meaning, unless we have a significant shift from the U.S. central bank to far more hawkish than we are right now, and far less hawkish from Christine Lagarde and the ECB, we'll probably hit slightly lower lows, but that kind of acceleration to the downside that we saw between, say, April and May, is those types of moves are probably no longer viable. PP asks, in my portfolio, what percentage is long-term investing? What percentage is interest? So when I say portfolio, it's all long-term, PP. And long-term to me is weekly interval analysis, 6-month minimum hold time. 6 month is where I'm testing I'm watching that symbol, a fresh addition to my portfolio. And I want it to, the best way that I can phrase it is to make the team. Right? It's got to make the team. And if it can't make the team, I'll cut it. So within that 6 months, it's got to gain some traction. So that's something to keep in mind. What I think a portfolio trade is: 6-month minimum, usually 1 to 3 year holding time or longer, depending on the way that it's moving. But it's weekly time frame analysis. So my intraday trading, my day trading account is separate from my swing trading, and my swing is separate from my portfolio. So it's 3 distinct accounts. Yeah. All right. Gordon asks, how come we hear from the Fed so often? Right, Gordon? I wish they'd shut up sometimes. That's true. We're in the middle of a central bank policy shift. We have been since really Q3, easily Q4 of last year. And right now we're in that wonderful time where they black out. What is it, 2 weeks or 10 days or whatever it is before the FOMC announcement? We don't hear from them. So we're in that nice quiet period right now. After that, it's game on again. But anytime we're in the midst of a monetary policy shift to a dovish policy or to a hawkish policy, we're just simply going to hear from them a whole lot more. That's just the way that it is. PP Family asks, on options day trades, do I day trade index options or stock options or commodity options, all of the above, if there's liquidity. If stock options, does a stock move enough to cover premium? That's the hope. So when we are trading options, and I do the stock option day trading in the mastery room, PP, that's where I do that. And this is our schedule. We continue to add to this schedule. So we added over summer 5-day a week morning day trading, and we are going to keep doing that. Wasn't just a summer thing. We're going to keep doing that year round. And then we have our tech session. We have our Ask Me Anything session. We have that portfolio building session. Then we have our watch list building session. And we're going to keep adding. I don't know what days and times, but when we are day trading, as you can tell, between 9:20 and 10:30 every morning, I'll look at index options. We'll look at sector options and even individual stock options. And again, the movement, that's up to the market. I can't control that. The best thing I can do is, like a great batter would, as the great Ted Williams would. What I try to make sure that I'm doing is thinking about, is that trade sailing over the plate in the zone that I know I have a higher win rate, that I have probability on my side? It's no guarantees, but I know there are certain trades that tend to be my trade, right? Hence, Ted talked about, he knew, depending upon where that pitch was, what his batting average was likely to be. We need to have that understanding in our trade entries as well. All right, gang. So I'm gonna wrap it up. I know we went a little bit longer with the with the show today, but I'll see you all on Sunday, 6 p.m. Eastern, for our weekly Raghee report. We'll take a look at the markets, take your questions, take a slightly broader look, take a look at the economic events, and prepare for the week. 6 to 6:30 every Sunday. That's when the markets open in Asia and we start getting action in the futures. We see if there's any gaps or not. So I'll see you all then. Thank you as always for being a part of the show. We're coming up on 2 years of caffeinating and dominating. I really appreciate you joining me each and every morning. I'll see you on Sunday. Be good to each other.